Time for our options insight segment. And Kriti, you've been taking a look at the technicals.
We're looking at the technicals. Is this volatility really sustainable? This surge in the stock market really sustainable? And there's no better person to ask than Alec Nuckman, Chief Market Strategist at Bullseye Option. Thank you so much for joining us today for Options Insight. Let's start off with talking about the technicals. Is this bounce back really sustainable given the levels you're watching?
Well, we'll have to wait and see, but we'll want the markets to tell us that. That sell-off, that shakeout, that FU move, that's a fake-out breakout, is what you need to see to have the markets turn. Now, we've got to build on yesterday's gains, but that was significant, the fact we made new lows, new swing lows in the S&P, but volatility, the VIX did not make new relative highs. So that's bullish divergence, and that's a lot of times the capitulation that puts a bottom in the market. And it wasn't just stocks. It was so many other sectors as well. We saw a reversal in oil, which was up 9%. To unchanged. We saw gold, which is up 4%, making multi-month highs, to actually negative on the session. So if we can build on that, that's a good base in place when you look at the markets technically.
Yeah, and you are watching, I believe, if I got your notes correctly, 4250 is the right level. Why are you watching that level specifically for the S&P 500?
Well, just using simple math, the market had rallied from 3,700 in January of 2021 up to 4,800 highs. So the halfway point of that was 4,250. That was actually the low that we had in January. So that held as a midpoint support. Now, yesterday, it was violated on a daily basis, but now we're back above it. I like to look at things on a weekly basis, and that's very much a positive. So we had new lows, and it looks like we're going to have a higher weekly close in the S&P. That is a very positive sign that you can see things, sentiment change. But again, we need to build on it next week. 4,500 is the upside, is the midpoint of the drop from the top. So we can get above that. What we've seen every time in history is we get above the halfway from that fall that has made new all-time highs. So I'm not one to say that it won't happen again.
Well, interesting levels to watch. Let's go from macro to the micro. Walk us through your trade on a stock that you're watching.
Yeah, the company I'm looking at is EVGO, looking for it to go. It's been beaten down. It's 50% off its highs from just in November. But here it's been trading sideways between 8 and 11 from the last couple of months. So a breakout of this range targets 14. Now, looking at it, technically, it also had bullish divergence in the fact that it made new lows here at $7, but did not make new highs in volatility. That's usually a sign that a short squeeze can happen and that the short sellers have run out of strength. So what I'm looking at is the May $7 call. Has 3 months of time. It's deep in the money. It's like being long from the low. That option's trading for about $3 or less, and it's $250 in the money. So the basis here is if it gets that 14 level, that this option will double in value, but we've got time, and it's like being long from that low level.
Yeah, Alan, we got about 30 seconds here. I'm going to end here with asking you about the volatility. We're looking at a VIX that reached as high as, I think, a 37 handle yesterday. Can it go higher?
Oh, yeah, the VIX can always go a lot higher than you think, or a lot, just like the markets can go higher or lower than you think. 39 was the high in January. We did not eclipse that on this latest run yesterday. So that is a very positive sign. Lower VIX usually means higher S&P.
Well, smart stuff. Alan Nuckman, thank you so much for joining us on this Friday. Have a wonderful weekend. Chief Market Strategist at Bullseye Option. Thank you again for joining Options Insight from New York.